Hello guys, welcome back to my channel. Don't forget to like, share, comment and subscribe this channel. Euro sterling plunge on soft business activity data, UK budget loss. New York futures, the euro and sterling plummeted to fresh 20-year and 37-year lows against a surging US dollar on Friday after surveys showed the downturn in business activity across the Eurozone and Britain accelerated this month, and the economies were likely entering a recession. Also weighing on sterling, Britain's new finance minister Kwasi Kwarteng announced tax cuts and household and corporate support measures, and the UK debt office laid out plans for £72 billion or $79.74 billion of additional issuance for this financial year to fund the stimulus. Sterling posts its biggest weekly decline against the US dollar in 2 years after it touched a fresh 37-year low of $1.8040. The pound was the day's biggest loser against the dollar, down 3.4% at $1.8074, and also had its largest daily percentage loss in 2 years. British bond yields also surged on Wednesday as precise sank. Benchmark UK 10-year yields soared to 3,829 point, a level not seen since April 2011. The market is giving very strong signals that it is no longer willing to fund the UK's external deficit position at the current configuration of UK real yields and exchange rates. Rodgers Sarafoulos, global head of FX research at Deutsche Bank, in a research note. The policy response required to what is going on is clear: a large intermittent rate hike from the Bank of England as soon as next week to regain credibility with the market, and a strong signal that it is willing to do whatever it takes to bring inflation down quickly and real yield into positive territory, he did. Earlier in the session, UK PMI figures showed the downturn in Britain's economy worsened this month as companies battled soaring costs and faltering demand. Moving in line with the pound, the euro dropped 1.5% to 0.69 and $89 after earlier hitting its lowest level since October 2002 of 0.96 and $69. The fall was triggered in part by data showing S&P 500 Global so flash Eurozone Composites Purchasing Managers Index or PMI, seen as a good gauge of overall economic health, fell further in September. The downturn in Germany businesses activity deepened as higher energy costs hit Europe's largest economy, and companies saw a drop in new business. Europe's shared currency had its worst weekly performance since March 2020. Central bank policies. The yen was 0.6% lower at 143.34 US dollar, but had its first weekly gain of 0.3% in more than a month after Japanese authorities intervened in markets on Thursday to support the currency for the first time since 1998. The yen rallied more than 1% on Thursday on news Japan had bought yen to prevent the battered currency. Trading was thin on Friday with Japanese markets closed for a public holiday. The dollar index, which measures the US currency against a basket of currency including euro, sterling and yen, surged of 113.223, its highest since May 2020, and topping to the said high hit earlier this week. It was last up 1.6% at 111 and 12.69, posting its best largest weekly percentage rise since March 2020. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. Thank you.